In this video, we're going to talk about currency pair correlation and how it can affect your trading. I have Aussie dollar, US dollar, and Australian dollar, Japanese yen right next to each other. This is the daily chart, and you can see the similarities between the two charts. So these two currency pairs are strongly correlated. So when you have two pairs that are strongly correlated, obviously their charts are going to look very similar. They're going to move at the same time in the same direction. So when you're trading, you need to be aware of which pairs are strongly correlated, so that when you take a trade on a pair, that if you take both trades, if you take two trades, it is essentially doubling the position size. So you will be risking more because the trades mirror each other. If one trade goes for a profit, the other will go for a profit. If one trade goes for a loss, the other will go for a loss, because they're highly correlated. So you just need to be aware of which pairs are highly correlated. That way you're not risking more money on that position than what you want. You could even do two positions at half your normal risk, just because they do still play out a little different. But for the most part, highly correlated pairs, you don't want to get in at the same time if you're not wanting to risk more money. And when you're going through and making a watch list and scrolling through and switching to different pairs, sometimes it's easy to forget which ones are highly correlated, and you'll see two awesome setups and you'll think, oh, I'm going to get into two trades, but if they're highly correlated, those trades are going to play out very similar. So this is, again, Australian dollar and Australian dollar, US dollar, and Australian dollar, Japanese yen. Now I'm going to show you two pairs that are inversely correlated. So their charts look like the opposite of each other. So this is euro dollar, US dollar. And this one down here is US dollar, Swiss franc. I cleared all these charts. So as you can see on these charts, they are inversely correlated. So what could happen is, on one day, if you have a trade that is looking like a good setup for a long on euro dollar, US dollar, and there's a nice trade that's set up for short on the US dollar, Swiss franc, then those trades will play out for the most part the same. So if you are long euro dollar, US dollar, and short euro dollar, Swiss franc, that is like doubling your risk for that trade. So this example and the previous example are both on the daily time frame, and that is the main time frame that I use for correlation, because most of my trade decision is based on what is happening on the daily. So that is where I make a decision to drill down to the lower time frames to time a position. So this is the main time frame that I that I look for correlation, but you can look at it on different time frames. So a trick or just a tool that most people can use to identify correlation is this website. Let me scoot it down so you can see. It's at myfxbook.com, and it's this drop down and go to correlation. So right here is a list of currency pairs. So our first example was Australian dollar, US dollar, and Australian dollar, Japanese yen. And right here is going to be the top absolute correlations, and it's going to list also some pairs that you probably don't trade, like the Singapore dollar. Okay, one thing I forgot to mention real quick, here's the time frame where you can change where or what time frame the correlation chart is showing. So this is the day, which is what I mainly use, but if you want to show the weekly, you can see our Aussie dollar, Aussie US dollar, Aussie Japanese yen correlation actually increased to 95.6 on the weekly. So if you go back to the daily, it's down here at 91.7. So on the higher time frames, it's actually correlated more. So just, I believe it defaults to 1 day. Mine is always there whenever I go to the website. I don't know if it remembers it from my past, but it would make sense since daily is king, and that's what most people are doing. Their most technical analysis is on the daily, at least their main analysis, just because it is the king of time frames. So I will let you get back to the rest of the video. So the top absolute correlation is listing both the inverse and the positive. So positive correlation and the negative correlation. So you can see our example was 91.7% correlated. And that was with these two pairs. And you can click on the pair and it will kind of show you a history of the correlation. So I don't look at this a lot, but it's nice to know it's there. You know, it's always been strongly correlated. But let's just go back and I will show you our second example, which was Euro US dollar. And you can see the negative correlation that's the highest is with US dollar Swiss franc at 94%. So that is over here in the negative correlation. It'll show you all the negatives, and over here all the positives. So this is a tool that you need to use just to help you risk manage, so that you're not taking higher risk on a single opportunity than you think you are. If you are aware of the correlation and you still are happy with taking them both, depending on your trading plan, how you trade, that's one thing. But not knowing about it and trading in the dark without looking at the correlation is something you need to be aware of and be doing, and it can help you drill down your watch list per week or per day. If you have 5 pairs on there and 2 of them are highly correlated, now you're only down to 4 pairs. Depending on which one, you may still look at those 2 to see which one looks better on the lower time frames, which is what I would do for the actual trade entry, which one is cleaner. But it would make your watch list smaller to help you focus on a smaller amount of pairs for that day or week or however time frame you like to trade in. But anyways, just a quick video on Forex pair correlation. I just wanted to do a quick video, and hopefully this helps some of you that aren't aware of how easy it is to look up the correlation and how important it is for your risk management. So I hope this helps. Leave a comment below if you have any questions, and I will be happy to help.